Hi everyone, welcome to my channel where I declutter stuff for you and make it simpler. Today, I'm going to review tech giants Netflix, Google, and Microsoft's recent earnings report released this week. So let's get started. Please make sure to subscribe and hit the bell icon to get notified of my future videos. And if you find this video helpful, please give it a thumbs up and leave a comment below. So let's get started. Netflix, the leading streaming service, had a stellar quarter, beating analysts' expectations on revenue and subscriber growth, but missing on earnings per share. The company added more than 13 million subscribers for the quarter, compared to Wall Street's expectation of 8.7 million. This was the highest quarterly subscriber growth in Netflix's history, and brought its total number of subscribers to a record 260.3 million. Netflix also reported revenue of $83 billion, slightly above the consensus estimate of $8.72 billion. However, earnings per share came in at $2.11 below the $2.22 expected by LSEG. Netflix attributed its strong performance to its investments in original content such as Squid Game, The Witcher, and The Crown, which were some of the most popular shows on the platform. Squid Game, a Korean thriller series, became the most watched show ever on Netflix, with more than 142 million households watching it in the first 4 weeks. The Witcher, a fantasy series based on a book and video game franchise, also broke records, with more than 76 million households watching it in the first 4 weeks. The Crown, a historical drama about the British monarchy, won several awards, including the Golden Globe for Best Drama Series. Netflix also expanded into new genres, such as gaming, live entertainment, and sports programming. The company launched its first mobile games, based on its original shows, such as Stranger Things and The Witcher. The games are available for free to Netflix subscribers, and are integrated with the Netflix app. Netflix also experimented with live events, such as a global fan event called Toodum, which featured stars and creators from its shows and movies. The event attracted more than 12 million viewers across YouTube, Facebook, and Twitch. Netflix also ventured into sports programming, acquiring the rights to stream Formula One races in select markets, and partnering with the NBA to produce a documentary series about the 1992 U.S. Olympic basketball team. Netflix also implemented several initiatives aimed at adding subscribers, especially in the highly competitive U.S. market, where it added 1.2 million paid subscribers in the fourth quarter. One of the initiatives was a password-sharing crackdown, which pushed password borrowers into creating their own subscriptions. Netflix started sending messages to some users who were using someone else's account, asking them to verify their identity or sign up for their own account. Netflix said that this was a test to improve security and prevent unauthorized access, but it also helped to convert some of the estimated 25 million password borrowers in the U.S. into paying customers. Another initiative was the introduction of an advertising-supported subscription tier for $6.99, which is significantly cheaper than Netflix's ad-free offerings, which start at $9.9 per month in the U.S. The ad-supported plan, which is available in select markets such as Canada, Mexico, and Brazil, allows users to watch Netflix's content with occasional ads, similar to Hulu or Peacock. Netflix said that this was a way to offer more choice and value to consumers, and to reach new audiences who are more sensitive to price or prefer ads. Netflix said that the ad-supported plan had a positive impact on subscriber growth and retention, and that the ads were not intrusive or disruptive to the viewing experience. Netflix's stock performance after its Q4 2023 earnings release was positive, as the shares rose more than 10% in extended trading on Tuesday, January 23, 2024. The main reason for the increase was the strong subscriber growth, which exceeded analysts' expectations and offset the earnings miss. Netflix's stock closed at $483.86 on Tuesday, up 2.4% from the previous day, and surged to $533.50 in after-hours trading. Netflix finished 2023 with 12% revenue growth, up from 6% growth in 2022. The company also gave a bullish outlook for 2024, projecting that it will add 10 million subscribers in the first quarter, and that it will increase its revenue by 15% and its operating margin by 20%. Netflix said that it expects to continue to grow its subscriber base and revenue as it invests more in original content, expands into new genres and markets, and leverages its data and technology to improve its service and user experience. So what do you think of Netflix's Q4 2023 earnings report? Are you impressed by its subscriber growth and content strategy? Are you interested in its new initiatives such as gaming, live events, and sports programming? Are you tempted by its ad-supported plan, or do you prefer to watch Netflix without ads? Let me know in the comments below. Now let's talk about Google's parent company, Alphabet, which just released its fourth quarter results for 2023. And let me tell you, it was a mixed bag. On the one hand, Alphabet reported a huge jump in its net profit, up 51.8% from a year ago, thanks to its strong performance in search, YouTube, and advertising businesses. The company also beat analysts' expectations on both earnings and revenue, posting $1.64 per share on $86.31 billion revenue. That's impressive, considering the challenges the company faced from the pandemic, the AI revolution, and the regulatory scrutiny. On the other hand, Alphabet's ad revenue, which accounts for about 76% of its total revenue, missed the mark by a small margin, as growth slowed from last year. YouTube ads also came in slightly below estimates, reporting $9.2 billion. This suggests that the company is facing some headwinds from the rising competition from TikTok, which has been growing rapidly in the short video space. Another area that investors were watching closely was Google Cloud, which is the company's fastest-growing segment and a key driver of its future growth. Google Cloud reported a 26% increase in revenue and an operating profit of $864 million following a year-ago loss of $186 million. This shows that the company is making progress in closing the gap with its rivals Amazon and Microsoft in the cloud computing market. However, Google Cloud's revenue growth was lower than the previous quarter, when it grew by 35%. This indicates that the company is still facing some challenges in scaling its cloud business and competing with the established players. Moreover, the company recorded severance and related charges of $2.1 billion for 2023 due to workforce reductions and office exits, which weighed on its operating margin. As a result of these mixed signals, the stock dropped more than 6% in extended trading on Tuesday, as investors were disappointed by the ad revenue miss and the cloud revenue growth. Analysts have mixed views on Google's future outlook, as the company faces challenges from AI technologies, competition from TikTok, and regulatory pressures. Some analysts have raised their price targets for Google, citing its dominance in the digital advertising market and its potential in cloud computing and AI innovation. Others have lowered their expectations, citing the company's high costs, lack of profitability in cloud, and delay in launching its Gemini AI model. Google's CEO Sundar Pichai remains optimistic, stating that the company is pleased with the ongoing strength in search, YouTube, and cloud, and that the best is yet to come as it enters the Gemini era. Gemini is Google's ambitious AI project that aims to create a general-purpose artificial intelligence that can perform any task across any domain. The company has been working on Gemini for years, but has not revealed much details about it. Pichai said that the company will share more information about Gemini in the coming months, and that it will be a game changer for the company and the world. So, what do you think about Google's earnings report? Are you bullish or bearish on the stock? Do you think Gemini will be a success or a failure? Let me know in the comments below. Now let's talk about Microsoft. Microsoft's earnings report for the second quarter of fiscal year 2024, which was released on January 31st. Microsoft is one of the largest and most influential technology companies in the world, with a market cap of over $3 trillion. So let's dive into the numbers and see how they performed in the past 3 months. First, the headline figures. Microsoft reported revenue of $62 billion, up 18% year over year, and beating analysts' expectations of $61 to $12 billion. Operating income was $27 billion, up 33%, and net income was $21.9 billion, up 33%. Earnings per share was $2.93, also beating the consensus estimate of $2.78. These results show that Microsoft continues to grow its business across all segments, especially in the cloud, gaming, and productivity sectors. Now, let's look at the segment breakdown. The Intelligent Cloud segment, which includes Azure, SQL Server, Windows Server, Nuance, GitHub, and Enterprise Services, generated $25.9 billion in revenue, up 20% and above the $25-29 billion consensus. Within this segment, Azure and other cloud services grew 30%, faster than the previous quarter's 29%. This indicates that Microsoft is gaining more customers and market share in the cloud computing space, which is expected to be a $1 trillion opportunity in the next decade. According to Wedbush analyst Dan Ives, Microsoft also announced that it now has 53,000 Azure AI customers, and 1/3 of them are new to Azure in the past year. The Productivity and Business Processes segment, which includes Office, LinkedIn, Dynamics, and other software and services, generated $19.25 billion in revenue, up 13% and above the $18.99 billion consensus. Within this segment, Office 365 commercial revenue grew 22%, driven by strong demand for cloud-based productivity tools amid the hybrid work environment. LinkedIn revenue grew 25%, as the professional network saw increased engagement and advertising revenue. Dynamics revenue grew 28% as more businesses adopted Microsoft's cloud-based enterprise resource planning and customer relationship management solutions. The more personal computing segment, which includes Windows, Surface, Bing, and Xbox, generated $16.89 billion in revenue, up 19%, and slightly above the $16.79 billion consensus. Within this segment, Windows revenue grew 14%, as PC demand remained strong due to the ongoing chip shortage and the Windows 11 launch. Surface revenue grew 37% as Microsoft introduced new devices such as the Surface Laptop Studio and the Surface Duo 2. Bing revenue grew 34% as search advertising benefited from the recovery of the online advertising market. Xbox revenue grew 23% as Microsoft saw strong demand for its Xbox Series X and S consoles, as well as its Game Pass subscription service, which now has over 25 million subscribers. So, how did the market react to these impressive numbers? Well, Microsoft's stock price initially dipped 2% in after-hours trading, as the company issued a slightly lower-than-expected revenue guidance for the next quarter, between $60 billion and $61 billion compared to the $60-93 billion consensus. However, the stock quickly recovered and gained 1.7% the next day, closing at 404.41, a new all-time high. The stock is now up 7.4% year-to-date and 58.2% year-over-year, outperforming the S&P 500 index, which is up 4.4% and 26.8% respectively. So what is Microsoft's outlook for the future? Well, the company seems to be very optimistic and confident about its growth prospects as it continues to invest in innovation and expansion. For example, Microsoft recently completed its $68 billion acquisition of Activision Blizzard, the largest video game publisher in the world, which will significantly boost its gaming portfolio and audience. Microsoft also announced a $150 billion share repurchase program, which shows its commitment to returning value to its shareholders. Moreover, Microsoft is expected to benefit from several secular trends, such as the digital transformation, the hybrid work and learning model, the cloud migration, the artificial intelligence adoption, and the metaverse development. In conclusion, Microsoft delivered another stellar quarter, demonstrating its resilience, diversification, and leadership in the tech industry. The company is well positioned to capitalize on the huge opportunities ahead and to create value for its customers, partners, and shareholders. I think Microsoft is a great long-term investment, and I'm bullish on its future. That's all for today's video. I hope you enjoyed it and learned something new. If you did, please hit the like button, subscribe to my channel, and share this video with your friends. Also, let me know in the comments what you think about the earnings report of these tech giants and what other topics you want me to cover in the future. Thank you for watching, and I'll see you in the next video. Bye.